Hey, welcome back to the channel. Jimmy here. It's Wednesday. I've got 3 items on the list for today. I want to talk about a covered call I took today. I'm going to show you the ins and outs of it all, why I took it, what I liked as far as chart patterns go, and then I'm going to talk about what the entry was and what my strike price is over the next month. Then number 2, I want to dive into a concept I like to call ride-along shares. And those are just shares that are not in a contract, but they're riding alongside my position in case a stock spikes. That happened today. I sold my ride-along shares. I want to explain kind of what I was thinking, exactly what the ride-along shares are, and then ultimately why I decided to go ahead and dump them today. And then number 3 on the list for today is breaking down some ETFs. We're going to dive into natural gas, gold, crude oil, and possibly the NASDAQ. We'll take a look at what happened today in the markets. So let's jump in. Let's dive into things here. So you can see I have ticker symbol MDB brought up on the charts. And this is MongoDB. This is a tech company. They deal with database and database design. And as you can see, MongoDB has shown a ton of growth since sort of back 2017. And let me make sure I have the max. Okay, yeah. So back here in like October of 2017, it's just been showing steady growth. And as more technology advances, MongoDB seems to find its niche with collaborating with different companies who are using their services. And as you can see, you know, it likes to ride along the 50 EMA. And occasionally, and I've noted this in the past, I think I've talked about it on the channel a long time ago, but this thing right in this area broke high and pulled back, and we were actually watching it, and it ended up popping again. So what I like about MongoDB is it's setting a high, pulling back and resting, and then repeating that process. So when it did it this time, it pulled back, and when it got close to this support level, I started really watching it and saying, you know, if it starts to show signs of an uptrend, maybe I could look to write a covered call on this. And I watched it yesterday, and we got this candle here. It wasn't doing a whole lot, just kind of setting up right on the 50, but not breaking down. And it left this longer lower wick after yesterday's price action. So today when it opened, I was looking for it to push up and break the high of the day before, and it did that. Then the minute it did that, I was then looking at the 5-minute chart for a little pullback. Once I got a pullback, then I decided to go long. So I went ahead and flipped over to the trade tab, and as you can see, my position is here, but the premium this morning on the 165 strike was $6 and I think 30 cents, $6.20 right in there on the bid. And this is for the calls. So I went ahead and entered my order for a covered call. So I ended up buying 200 shares of MDB and at the same time writing a covered call and receiving the $6.35 premium per share. So it ended up being a $1,270 premium payment this morning on this particular position. And then I didn't buy any ride-along shares. I'm going to get into that more here in just a second, what the ride-along shares are. But this thing decided to just have a rip of a day. And you can see, here's my strike price. So if it crosses this strike price, someone has purchased the opportunity to buy my shares from me at this price. So it may surge past, I'm not sure, but the first day's work, I like that we're back up above the 20 moving average. I like that we broke the previous day's high, and we also broke this little peak right here, this high as well. So we're actually technically setting a higher high, which is indicating possible uptrend. So MDB is looking really good as a covered call, and strike isn't that far off. And I think if we go back to the trade, you can see the expiration is going to be on August 23rd. So between now and August 23rd, if this crosses above $165 strike, then someone can, if they want, purchase my shares at the $165 level. And I calculated it out, and I believe the profit, if my shares get called away from me, if someone chooses to buy them from me at 165, it ends up being a little over $1,600 profit. So kind of a nice situation. I took good premium today, and if they get called away, then on the week of the 23rd of August, it could be potentially another $1,600 plus day for that week. So that's what I did this morning on MDB. Now, let's talk about what ride-along shares are. And I'm going to flip over to ticker symbol W, which is Wayfair. Now, Wayfair is one that I took last week, and I really liked this because it was starting to set up right in this area on the combination of the 20 and the 50 EMA. And what happened was today, it just started pushing up really hard, pulled way back, and then just started to climb all morning long. When it pushed up to 154.41, I thought to myself, you know what? You have your ride-along shares. You could possibly take those here and just book some quick profit. And this is actually fantastic because I'm going to show you this. You're not even going to believe what happened. But you can see I sold 50 shares at 154.20 right on this candle. The very next candle, look what happened. All the way back down to 151.65-ish. And then since then it's kind of been grinding higher again, but had a major sell-off right after I got out of those 50 shares. So I took about $423 profit on that today. Right at the top here. So it left my total day to be a little over $1,700. All right, so I've got Wayfair up right here, 5-minute chart. I'm just watching it. I've got the 50 ride-along shares. You can see I have 250 shares right here, but I'm just using these ride-along shares. There you go, just got executed. So what happened was Wayfair pushed up really nice, and I was looking for an opportunity to sell my ride-along shares. And when I say ride-along shares, all I mean is shares that I own that are not involved in a contract. And the reason I do that is because let's say a stock pushes way above my strike price, and there's nothing I can do because my shares are in a contract. I'm gonna hold them, but it could come back down. Well, in today's case, it pushed up almost to my strike price. We pushed nice and high. Now, with such a big push, it's likely that Wayfair may pull back now. Well, I have 50 shares that are not involved in a contract and are just riding along. So I went ahead and put a stop limit order to sell those at 154.20. Just kind of hoping just to see if I could maybe get a nibble real high. And as you can see, it just peaked out, executed my position. I sold 50 shares at a profit of about $8.46 per share on those 50. We'll see what happens tomorrow, but right now I just wanted to show you that live execution. Let's jump back into the video. But the concept of the ride-along shares, what I do is I'll typically buy 200 shares of a stock and write a covered call on it. Once that's done, I'll typically then buy a small position like 50 shares. And those 50 shares are not part of a contract. I just own them. And the reason I do that is because, for example, if we go back over to MongoDB, right in here, imagine if I would have had 50 ride-along shares today, and this thing decides to rip. And let's say it even went above my strike. What if it went to like 167 today? There's nothing you can do if you're in a contract. You know, I could pay back my premium and buy my calls back and then sell my position, but that's a lot of hassle and a lot of money to pay back just to claim, you know, a $500, $600, $700, $800. But if I would have had 8 Or if I would have had 50 ride-along shares that weren't in a contract, when you get a push like this, I just dump them. I sell them and then take profit. And what that does is that helps with any downside that you might see in your position while you're holding a covered call. So this was actually this would have been a really good opportunity on MDB to sell or to have 50 ride-along shares. But I didn't do that. I just took my 200 shares and I just went with that for right now. And I'm excited to see where this goes, but I have a feeling we're going to get to the strike really pretty quickly. So it's interesting. It's always a balancing act trying to figure out, how far do you, how high of a strike do you pick? Because you want to make profit on the premium on the front end, but you also want to make profit on the back end if your shares get called away from you, meaning they went above the strike price and someone exercised their right to buy your shares at that strike price. You still profit, but if your strike price is high enough, you can generate some good money as your shares get taken from you. So the ride-along share concept is just having shares not part of a contract that you can dump anytime for a little extra profit. And that's what I did for $423 on Wayfair today. So with that out of the way, why don't we jump into some natural gas? Let's see what it did today. So I'm going to just bring up the 1 minute chart and let's go ahead and let's zoom this out a little bit and take a peek at what was happening today. So I'm going to move myself up here. So you can see, and you know what, let's actually bring myself over here. And let's go ahead and load up our ETF studies. Okay, so with /NG this morning, looks like things opened up and we were just sort of gently riding, dipping on both sides of the VWAP, and then around 5:45 we declared kind of a direction here. So let's focus in on that. So we were getting some touches. We were showing an uptrend off the middle VWAP. So after getting one touch down, then another one down, and another one down, this could have potentially been a great opportunity to enter on this, well actually 1, 2, 3, this fourth touch. So at 6:34 this morning, let's look at UGAS, the corresponding ETF, and see what that was looking like at 6:34, because that could have been a great potential entry, and that would have been right here. So you could have entered somewhere in here, probably as it opened back above the VWAP for confirmation. You could have held to the top or to this top. So you're looking at about 1%, right around 1%, which wouldn't have been horrible. And you could have sold, as it popped above. So maybe like 0.75 to 0.8 would have been good. But that would have been a nice play on natural gas today. And then as it progressed throughout the day, let's see. So it had that, then it came back down and it consolidated and then broke down. Pushed back up above, consolidated, started to come down and then ripped back up. So that's a little confusing in there. As it came back down though, it pulled up and then broke. So maybe below the bottom of this candle, when it broke down at 9:02, you could have taken DGAS. Let's look at DGAS at 9:02. That could have been a potential. Let's see here. So here's 9:02 right here. So potentially taking it long there and selling at the top VWAP band could have been a 1.73%, which that's pretty good. Or you could have just kept holding. You would have dipped down and then gone here, and then dipped and went here for 2.79. So really that would have been probably a decent trade you could have taken on natural gas using the inverse ETF DGAS. And as the day progresses, let's see if there's any other opportunities we can find Then it looks like it was starting to just sell off a little bit. So after you got that sell-off touch, back up, back down, another one. Yeah, any of these opportunities in here and here, if you get confirmation, but it's tough because I like to wait till it plays into the middle VWAP. So really this one might have been better, more my style, and this one possibly, because you got this bearish engulfing candle coming down. So you could have got in here on DGAS as well. So natural gas looks like it had some good activity today. Definitely some opportunities there. Let's look at crude oil real quick, and let's see what's going on over here. So this morning on crude oil, it looks like early this morning it was kind of maintaining above the 180-day moving average, and then you got a break below, a pullback here. So this could have potentially gone short here all the way down. That could have been nice on the break of this low. So at 827, you might have been able to take DWT at 827, but let's look at it. So at 827 this morning, yeah, right here, you could have taken this, which would have been, yeah, that might have been good. That would have been 1.92%. That would have been a good opportunity on /CL for light sweet crude oil. And then as we progress into the day, we got this big sell-off, and then it was kind of just gone. It pulled up, hiccuped, came back down, and then it just sort of rolled downhill. So I guess this may have been the next opportunity, but it looks like it was kind of a get in and stick with it all morning kind of day for /CL. But yeah, if you could have gotten something short here, or if you could have gotten capitalized on this at all, maybe as it broke these lows, it pulled back and then broke the lows. So the low being here, the breakdown, sorry, that's not very straight. The breakdown at 840, you could have taken the inverse DWT again. So if we look at 840, yeah, so you could have gotten along here and held it. Another 2.77, that would have worked really well. That's not bad at all, actually. That would have worked as well. So that was /CL. Not as much opportunity, in my opinion, as natural gas as far as finding a nice entry. But still, downtrending most of the day. So if you would have gone ahead and bought DWT and just held, you'd have looked really, really good today. So let's look at /GC, looking at gold. And gold's up, that's great. So this morning early, it decided to declare sort of a downtrend, but then broke back up. So this is what I would look at on gold from this morning. Once you got this break back above the middle VWAP, and then it sold off back down, and then confirmed on this candle right here, broke this high, I would have probably considered going long at 628 this morning. And by long, I mean 628 on JNUG, the corresponding ETF. So let's see what 628 looked like. So 628 would have been right in here. And you could have potentially just held this thing. That's 1.5% there. But if you'd have just kind of held it almost to the open, you could have got 2.23. Or just after the open, you could have got 2.86. Or if you just sat on it all day until maybe 9 a.m., you'd have gotten 9.18%. So this thing really, really went. And if you were holding it right now, from that early entry, then you'd be looking at 11.22%. Let's see, 11.13. So wow, that's also another great opportunity on JNUG. So yeah, there was that, and then you can see this other opportunity here. Let's go back to /GC and see if we can pick out any other trends here. So once it went, it pulled back and then it never stopped. So I mean, really, I think the only opportunity today on gold was, let me draw a circle around it. In my opinion, this was the only entry on gold today. Maybe this if you were brave. So really, everything kind of started in the pre-market, which is tough because like I don't typically like to trade in the pre-market, so that can be kind of tough. But that was the entry right there, and you could have really, I mean, it's like an all-day hold. But anyway, that's it. I don't think I'm going to look at the NASDAQ today. I'm just going to stick with /GC, /NG, and /CL. We're looking at gold, light sweet crude oil, and natural gas. So hopefully these breakdowns are helpful. Let me know if there's any other additions you guys want me to make to these breakdowns. I like to typically look at those three every day and kind of give you my thoughts on where entries were and where exits are. One other thing we can look at real quick is just the daily chart. This is helpful with sort of gaining a bias on direction. And so if we look at gold right now, and I go to the daily chart, we can see that gold has been sort of downtrending, but then it had these levels in here that were sort of holding up. And let me grab my different drawing tool. So these levels in here were sort of keeping it down for a while, and then it just broke that. So this is kind of an interesting situation because gold is definitely bullish right now, and it's consolidating again. So you can see we're sort of getting this wedge that's forming. It might drop and pull back into this support level, or it might break higher. So it's actually kind of an easy read right now. We can just watch gold and say, you know, maybe tomorrow, if it starts to break down, then we might be a little more short bias looking at JDST. But if it breaks out of this wedge to go further long, we could be looking at JNUG tomorrow as our bias. Sometimes it's helpful to trade the corresponding ETF that matches the overall trend of the daily chart. It kind of puts probability in your corner, helps you out that way. So that's gold. Now let's just take a look at natural gas and see what it's doing. So natural gas is downtrending, and you can kind of see it was sort of going sideways. In the colder months, it popped up. Then demand for natural gas started to fall off, and now we're in the warmer summer months, so it's pushing back down. So our bias right now on natural gas would be that we're going to continue to possibly go lower. So I would use that going into the day tomorrow to say, okay, if we open up and we start to move lower right off the bat, likelihood is that I would want to be trading DGAS, the inverse ETF of /NG, just to put probabilities in my favor, okay? And then the final one we'll look at is /CL. And let's see what this one's looking like. So right now we had an uptrend followed by a long downtrend. Then we sort of peaked back up and then got rejected back below. But the important thing here is we just broke the 180-day moving average, pulled back and bounced and went higher. Now we've pulled back down into it again. So I think I would be looking at, if we get a break of this high moving up, I would say we're probably going to break this high and go longer. So then I would be more likely to trade UWT, the corresponding ETF. Now, if we break below the 180-day and go below this low here, then I would probably be more biased to be trading DWT, the inverse ETF of /CL. So those are kind of my biases on light sweet crude oil, on gold, and then also on natural gas. I hope that helps you guys out. It's kind of the way that I like to do things. It doesn't make it the right way, it's just my way. But leave comments below. Let me know if you guys are green today. Hope it was a great day. We're going to be back at it tomorrow. Sorry about no video yesterday. I just didn't take any trades and was also working on some other video ideas. So any video ideas that you guys have, let me know. I appreciate the support, all the love. The subscribers are growing. It's fantastic. Thank you. We'll see you tomorrow.